Hi everyone, this is Justin Simmons, DKC Realty Group. I wanted to thank you so much for joining me today. As you may know, I recently put up a listing at 622 East 223rd Street. It's a short sale. I've been getting a lot of questions from interested buyers regarding what a short sale is and what they should know about the short sale process. I realize a lot of people have asked me that throughout my career, so I figured, hey, let's make a video. Simply put, a short sale is a transaction in which a homeowner is selling their house for less than what they owe on their mortgage. Now, why might someone consider that? Great question. Let's say you owe $600,000 on your house, its current market value is $500,000, and you're unable to keep it with your monthly mortgage payments. In that case, you have three options. You can stop making your monthly mortgage payments altogether, wind up in a foreclosure. You can close on the house, and if it's a buyer with the bank's really only going to give them $500,000. You're going to usually wind up bringing $100,000 of your own money to the table to close the deal. Or you can get approved for a short sale, and you can avoid both the foreclosure and having to bring extra money to the table that you may not have in the first place to close the deal. Now, a key point about short sales is they're three-party transactions minimum. For a normal sale for a house, we're usually talking a seller and a buyer. But for the short sale process, we have the seller, the buyer, and the bank. The bank has to approve the short sale, and they also have to approve the price that the house sells for ultimately. Now, why might all parties consider doing a short sale? That's a great question. Well, for the seller, you want to avoid the foreclosure, and hopefully the short sale doesn't impact your credit as much. For the buyer, you're able to purchase a property at close to or a little bit below fair market value, and you don't have to worry about dealing with all the risk associated with buying a foreclosure. And for the bank, you can avoid the time-consuming process of foreclosing and then having to sell a home. Okay? So all three parties can see a potential benefit when you're doing a short sale. Particular things to know about short sales are they're lengthier transactions than normal. So think a regular transaction might be 2 to 3 months. A short sale can be 4 months, 6 months, a year. All depends. But give yourself some more time. The house is typically going to be sold as it is. The seller does not have the resources to fix it. The bank's definitely not fixing it. They don't even own it. So buyer beware, you're going to be buying the house as is most likely. Third thing to know if you're the buyer is your closing costs at the end of the transaction tend to be higher. You might have to pay what's called transfer taxes, and you might have to pay a short sale processing fee amongst other fees. So just be mindful of that. Okay? Thank you so much for joining me today for this brief video on short sales. I really appreciate it. If you like it, give me a like. I always love it. You can share it. Any comments or questions, or if there's any topics you'd like me to cover in a video, please let me know below. And of course, subscribe to the channel. You'll be getting weekly updates throughout the year. Thank you so much. I really appreciate it, and I hope you have a great day.